Hey, this is Justin with DayTradeTheMarkets.com, and I wanted to talk about the idea of what we call overlap and then what we call reverse overlap, and talk about what it represents and what that means. It is Friday, April 21st, 2017, and the first example I'll give is from the crude oil market. If you trade crude oil, you know that the last 3 days have just been huge down days. Here's a daily chart just to give some perspective. So this was Wednesday right there. We sold off like 4%. We sold off another like $1.50 today on Friday. So obviously some big moves. If you like market profile, here's another view of that. You can see that we started to kind of consolidate up here when we couldn't quite fill that selling gap from early March. We consolidated and we broke from that big overlay. It set up, when Wednesday's news came, we had a really big selling spike, consolidated a little bit yesterday and broke from that today on Friday. So just again, giving a different perspective of the bigger picture. But ultimately, what I mean by overlap is we like to, if you're familiar with some of our videos, if you've looked at the homepage, there's a video on boxes and what that means. But what we like to do is, divide the market up into different boxes, try to identify a vertical move and where it comes to an end, so that we can essentially look at different, a smaller playing field. Rather than having to think about the day as a whole, we want to think about how we can win the individual box. So the first box that we got here was a selling box here, and all things equal, we would expect the high of that selling box to offer resistance, and then if the sellers were strong enough, they could break below that selling box, and then the low of that first selling box should offer resistance as well. And in the meantime, if sellers are strong enough, they'll put in another selling box here, meaning that we've got two selling boxes stacking. And that means, number one, sellers are in charge of the day until that changes. And number two, where you have both of these boxes overlapping right here, that's a very strong area of resistance. Okay, so we would expect, number one, that the sellers could hold that if they are strong. It's a very important decision point. So number one, why it matters, it's a very important decision point for the market to decide if this area gets tested. If sellers are strong, they should hold that. Now, this was a little bit complicated today because we had the low of Wednesday's selling spike, or Wednesday's low here, that was kind of another key level that we were kind of battling it out with. So the bigger picture level here might have taken precedence. We didn't get all the way up to this level, but then you could see we started to sell off. So it shows us sellers are in control. This third selling box forms, and by the way, we had a little bit of what we call a box rejection here, the first test of the box low. When that basically means the first test of this box, the sellers couldn't get the job done. The door is open for the buyers to come in if they want. Now, they couldn't do anything with it. They couldn't take it back above this Wednesday's low, and then we had a breakout. When we break from a rejection like that, especially on really good aggression like this level 3 selling aggression, that's a little bit of more of a high percentage type of a breakout trade. But getting off track there a little bit, but bottom line is we had the first selling box here. We stack with another selling box there. We stack with another selling box there. So again, if this market's so strong, or so weak, I should say, that we didn't get all the way back up here, but that's a key decision point. The sellers need to hold that area. We then broke to a fourth selling box. What does that mean? That means that this area right here is a very key decision point for the market. Again, this is where the two boxes overlap. If you want to look at it like this, these two boxes overlap in this area right here. So if we think about what that means, it means it's a very important area of a decision point. So number one, that's a key area to determine, are the buyers able to come back in and take control, or are the sellers maintaining control? You can see some buying started to creep into the market down in here with these green bars, but ultimately the overlap area held. So number one, it's a very important decision point. Number two, it can be a really great trade location as well. Then we're running out of time, but before we tested it, but we got another overlap down here, and again, it's very late in the day on a Friday. You're not going to mess with that at that point, but it's the same idea. If when we open on Monday, if we're above that, it doesn't tell us that buyers are going to take this thing to the moon, but it tells us that at least the pure vertical control made by the sellers may have come to an end. So we'll see if this kind of holds in the overnight and so forth. Again, late Friday, you're not going to mess with that, but that's the idea of an overlap. You can see all of these areas here are very important key levels that we want to monitor to see just how strong these sellers are, or if things are turning. Now, there's the other idea of a reverse overlap. There was actually one, it wasn't a great one, but there was one the day before on Thursday here. You can see that the first box we had was a buying box right here, okay? Now we had a box rejection where I like to think of this as the turtle sticks its head out of its shell above the box here. It says, oh, I'm not safe above the box here. I'm going to stick my head back in the safety of the box, or my shell if I'm a turtle, right? And so that's our first clue that maybe buyers are failing, again, it doesn't necessarily mean we're going to go make new lows. It means the door is open for sellers to come in. You could see they made this inside box here and they started to do it. And then we had another box that came in here, a selling box. So again, this is not two selling boxes stacking. This is a buying box failing and then a selling box coming in. Same idea though. This is what I call reverse overlap, where this area is very important in terms of a decision point. Number one, you could take a trade there if you wanted, and we could talk about how to score that. But number two, it's a very important decision point. You see, we had a bit of a battle as we tested this reverse overlap. That's actually where our overnight went to as well last night. I guess I should have talked about Thursday first, but that was where the overnight couldn't get through that reverse overlap in the overnight, and that set the stage for the big sell-off today, which again had the overlaps that we talk about there. There was another, actually, now that I think about it, another example of, let me bring up a gold chart. Okay, here is a gold chart from today. This is a little bit, I took everything else just to simplify it, but this is a little bit of a different reverse type of an overlap, but still a very neat thing. So a couple things here that we want to look at. Number one, we have an up bigger picture bias in gold. So all things equal, we'd like to find a way to get long. We then had new lows made by this level 3 selling aggression bar here. The thing is, this level 3 selling aggression bar didn't have any follow through. So that's our first sign that may be capitulation. And in an up bigger picture market, we're looking for failure of selling if we can see it. But again, we didn't get any follow through from this bar. And not only did we not get any follow through, but we got this level 3 buying bar that came in right afterwards. That's a pretty good sign. And we were talking about this in the live session that, if you're an aggressive trader, that's not a bad spot to try to get long in an up market if you're a little bit more aggressive. But what I wanted to talk about is if you look at the high of this level 3 bar, which is right here, and then you look at when that high was taken out, it was done so with this level 3 buying bar. So again, extreme buying. Not only did the extreme selling not hold, you could see that buying came in, but when it was taken out, it was done so with extreme buying. So if you look at where these two buses, one going south, one going north, kind of overlap, it's right here. It's non-traditional, but it's the same idea. It's that reverse overlap idea. In this case, where the buyers are more in control. So therefore, we would expect if the market comes back down to that reverse overlap area, it should give us pretty good support. Now, this was a little bit difficult because we had just tried to test above this 3-day overlay, bigger picture level, and had some selling that came into there. So it wasn't a slam dunk or a must, but same idea. The reverse overlap is a very important decision point. So whether you take a trade there or just look at it as a decision point to help you make sense of the market, I think it's an interesting area to watch. So hopefully that made sense. Again, just the ideas here of wanted to talk about the overlap, reverse overlap, and why it matters, both from taking a trade standpoint and from a making sense of the market standpoint. So hopefully that was helpful. If you have any questions, let us know. Thanks.